Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream where we're going over Fibonacci time, where I truly believe that this one is going to be like really good to like mold everything together that we've done thus far and bring up your trading to like a new level, because I feel that the time element, obviously being the x-axis, is so important in trading. And I feel like literally this is a stat off the top of my head now, but I would like to say something like 90% like do not take any consideration of time, and for me it's like a really important factor. So I feel like tonight you're gonna take away a lot. I feel that this is going to be like a really big step moving forward in your trading career per se, of like maybe you've heard things here and there of like time uses from like GAN, maybe like different sources. Obviously there's not just Fibonacci time, but Fibonacci time for me is great. And I feel that at the end of the stream, I hope, my goal is that you will like fully appreciate that time is really, really important actually in trading. And it's not just the price, it's not just looking at the percentage movements that are important, okay? And yeah, you're gonna hopefully your mind will totally expand and just be like so amazed at how useful Fibonacci, or not just Fibonacci time, I don't want to say that, because I'm going to talk about more than just Fibonacci time over the course of the next few months, I suppose. But tonight focusing on Fibonacci time, element of time, and that's going to be the focus today. And I truly believe that it's going to make you go on to a new level of trading, okay? Because I just don't see anybody using this at all, if I'm honest. And for you, it's so important. So Fibonacci time. That was a nice comment from Chris. That did make me chuckle. I guess I should say, seeing that one, I guess I'm gonna just give a real quick disclaimer before we begin tonight, and that's saying welcome to the few paid group leaders that have joined the group. Welcome to you. I'm not going to say any names, but hello. And along with that, there has been a massive increase of trolling, maybe from other paid groups that have opened up in rivalry, but yeah, definitely has been an increase in trolling, and unfortunately, for some unknown reason, they have actually joined the group as well. So if we do get it tonight, I'm not sure whether it will happen live, because obviously I can just block them. So I don't know whether, maybe they're that stupid, I don't know, but definitely they're in the group. But yeah, if that does happen in the comments, just ignore it and I'll block it. But just be aware that there's definitely been an increase in trolling. I don't want to give it any time more than that. Just be aware of that. And if you start seeing loads of Fibonacci time posts pop up on Twitter over the next few weeks, then you're welcome, because they're likely watching and learning from this one tonight. So there we go. We can expect to see some more Fib time on Twitter. Anyway, let's move on. Let's start with chart of the week here, okay, which is still ongoing, okay? So I'm not in any position, and this is like an I feel like it would be a really nice setup if Bitcoin wasn't so volatile. So, like I've said many times, altcoins really do well, okay, when Bitcoin volatility is low, and it's safe to say Bitcoin volatility is far from low, and it's very much volatile at the moment, okay. Really the best alts to be trading, Icon, ICX is just still the absolute number one. That has just been perfection, absolute perfection, if I'm honest. And that's still going well. That's literally still going well. I think it's up like another 6% today. EOS has been good as well. Litecoin has been decent as well, but really the majority have not been good, okay. And ENG, obviously one of these low altcoins, is it's going to struggle, okay. So my idea was to buy off of this order block, basically. So I've not taken any position on it, by the way. Just so you're aware, but I'll talk you through what I'm looking for anyway in a second. But basically, it's a long entry off the reclaim of the bullish consolidation zone. Okay, and obviously we haven't reclaimed it yet, hence no entry. But yeah, midterm trade, because obviously it's quite a move up here. I'll go over how I'm expecting it to play out as well in a second. But yeah, targeting into weekly resistance, and what I wanted to do is basically see price move into this sort of, what one could call it like a demand zone, consolidation zone. Okay. what I like to say is, imagine this was an old parallel channel. Okay, so we had an old parallel channel going on in here, and then you extend the parallel channel onwards in time. Okay, that's a nice way I think of like, saying it. Obviously, old consolidation / demand zone. And what we want to do is see price go into this and then move back out of it and claim it as support, and that's the entry. Okay, so you're definitely waiting for the market to show you that there's demand there, and obviously if you go straight through, then you never took an entry and you didn't lose anything. Okay, but that's what the setup is. Basically, you want to see it go into the demand zone and then come back above the demand zone to show demand, that the market's willing to buy at these prices, basically. Okay, so yeah, that's exactly what we're waiting for, and I hadn't updated a picture because nothing had literally happened when I was writing up this one. I think it was like yesterday or the day before I was writing up this PowerPoint, and it was literally it must have been yesterday. It was at the same level, so I didn't basically bother attaching any screenshots, but. If we load it up now, so this is the chart that we're looking at. We do have some confluences here. Obviously, the first one I will load up is from this old consolidation area to the left here. I don't think I've done a live stream on this like topic yet. But obviously you've seen me like trade Bitcoin off of this theory before. Works really, really, really nicely. But basically what I'm looking at here on ENG. Okay, you are looking at this last upwards movement before the sell-off, and what happens here is obviously this was the last upwards movement before the sell-off, and what you do is you just blast straight through it. Okay, so the theory is kind of that when you have this this zone here that offers no resistance on the way up, when you come back down to the level, you actually do expect it to hold as support. Okay, so say you have your level here. Okay, that was your green candle before the sell-off. If you smash through that level, okay, when you actually come back down to that level, you imagine it to hold as support for a reaction. Okay, so that's the theory behind it. I guess a really good example would be Bitcoin. Okay, so this would be a really lovely example. Okay, so if I just highlight this really briefly, okay, I'm not going to do the fibs exactly, but okay, so consolidation zone, okay, more or less, I'm just going to keep this fairly brief, but yeah, basically consolidation zone offered, no resistance on the way up here, you blasted straight through it, so then when you come back down and test this level, you expect it to hold as support. Okay, so last upwards candle before the sell-off offers no resistance. When you back test, you expect support to buy. As you'll know, well, depending on how long you've been in the group, this was the exact trade that I did take. I think that it must have been off of this wick down. I can't remember whether it was this wick down. Oh no, I remember the trade now, actually, saying that. It was off of... Where was it? It might have been here. I don't know. Igor will know because I remember him taking the exact same trade as me. I think it might have been this block here, actually. I can't remember offhand now. That's pretty bad. Well, I guess it was like 6 months ago. But basically, I just remember this was a really, really nice Bitcoin trade, and we bounced right off the 0.5 fib. But anyway, if Igor's here, he is in the comments. I see him. Hopefully, he can remember which actual level that was off of, because yeah, I take too many trades to remember that, but. I remember that was a great trade for the group. But anyway, going back to the actual chart at hand, yeah, this is the level we're looking at. So the 0.5 is a key, it's obviously the midpoint of the level. So you can actually see, funnily enough, that we have hit the midpoint of this, and you're up about 1%. Yeah, it's nothing crazy, but it doesn't really matter too much. What we want to do is we want to see the demand. So really now, entry trigger, okay, is to come outside of this. Okay, so you want to get above this and then hold it as support. Okay, then that's where you'll be looking for your longs, really. Okay, so everything I had put was more of a placeholder that you'll be looking for this. Okay, then once you've taken that, then you enter your longs. And for me, I'm looking at the daily first. So daily, I think, is going to be this level. No, this one. Yes. So daily, obviously, you have here your old daily level. Okay, so old, the last touches before a big rise in price. Okay, so yeah, that's the main level I'm looking at here, and I'll just put on all the horizontals I got. Obviously, possibly if you reclaim that daily. So this is a massive level, because it's so easy to do something like this. Reclaim this level, okay, reclaim the block, and then just move up to daily, hold that as resistance, and then drop back down to this lower daily, okay, and then do something like this to work your way down to the weekly. This weekly for me is a massive area that I'd be interested in. Something like this, okay, so it doesn't mean you definitely, if this even gets reclaimed, because I have zero interest in buying it at the moment. I'm really have zero interest in buying it while it's just going down. Okay, I want to see the strength. Okay, show me some strength and I'll happily buy, but until that happens, I'm just definitely not going to even think about placing a buy order. But So yeah, that's what I'm waiting for. Yeah, I'm waiting for that. So oh, someone in the comments just watched the video where I was on about that. I don't know. Yeah, it literally must have been like 6 months ago, that Bitcoin trade. But it was really, really, really nice trade. I do remember it well because it was very profitable. But I just can't remember the month. But yeah, basically, yeah, that's what I'm looking at. So that's ENG for you. I'll show you a few confluences that unfortunately, because of the speed that we've come down here, they've not worked out so well. But what I was also looking at was this Fibonacci channel, which I was, I think it would have been really nice if we had grinded down here a little bit. Obviously, we still got another 4 hours left of this close, so who knows? But what I was looking at is the CC of this Fibonacci channel. You can see here, okay, if we zoom in really closely, how this has been resistance, 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 support, support, support. So, I had in the back of my mind that maybe we could come down here and, a bit slower, if I'm honest, because the speed that we've come down here, it's a bit too quick. But it would have been nice if we could have ground down and then grinded along this, this CC for a little bit before coming back up. But that was one thing that I had in mind. That Fibonacci channel, and the other one was this pitchfork, which is just simply from, I haven't done a live stream on pitchforks either, but what we could see was this midpoint really acting as like a pivotal level, okay, where you can see it's being resistance, 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 support, support. And again, now because of the speed we've dropped too quickly down into the level. So I must say, yeah, I just want to really highlight I have zero interest in buying this one at the moment. It really is now a case of basically putting on something like this, an alert. Okay, now if you had the alert set, you'd have been alerted you're down into the level, then have an alert set of when you get back above it, and you have no interest in trying to catch the falling knife. You should have zero interest in catching the falling knife because you're more likely to lose money doing that than ever catch a winner. So yeah. Just want to really highlight that's the setup that I'm waiting for, and I'm very much waiting for this to come to me, okay, with a sign of strength and not anything else, okay, really. So, oh yeah, I would like to show you one more other, I've nearly forgot about this. So this is really, really nice actually. And this is a little bit connected to, well, it is actually just connected to Fibonacci time, okay? And this, by the end of the stream, you'll know what I'm on about here. But ways that you can see, what relationships of what's happened in the past to what's happened now in the present, okay? And using the Fibonacci time, what we can see is from the low of this impulse up to the high, okay? What we can actually see is, again, this is going to make more sense at the end, but impulse, okay, impulse finishes, okay? So when we're looking at a correction for that impulse, easily it can take 2 lengths of the time, okay? And on an average, you're going to be looking at a correction takes longer than an impulse. So you would always be looking for a correction. Okay, always is not the right word, but it's normal for a correction to take at least 2 times the length of the impulse. And what we see here is this did come down to the length for the impulse times 2, so the twice as long as the impulse, and that's where the impulse started. Okay, so we can remember now that the 2 times the length of the last impulse was important for ENG. Okay, so remembering that, what I am looking at here is from the low of where the impulse got started here up to the high. Okay, what we can see is the 2 to 2 is also coming up in the 31st, so 2 days time. Okay, so it's just an area to be aware of. You like to see these like Fibonacci time extensions lining up with areas that you're already keen on, because it would be crazy to just buy this because it's at the 2 to 2 extensions. That's definitely not how you use the tool. But yeah, it's just nice to see that the 2 to 2's coming up really on a zone that I'm interested in buying, but must just really, 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 really stress. Need to see the strength, and also with the way Bitcoin is, I have a little bit less, I'm less enthusiastic to trade ENG, if I'm honest, because I just am when Bitcoin's so volatile. Obviously, I say that while it's 0.2%, but you know what I mean. Like, this has just been, last 3 days we're up 13%. So, yeah. Obviously a bit of a cool down period at the moment, but yeah, Bitcoin's looking good. So yeah, that's ENG. Hope that made sense. And what exactly I'm looking for, and a theory behind a trade. And I think it's good when I do the chart of weeks that, for instance, when I had the levels selected, that you basically just have the same levels as me, and that way you're verifying what you're doing is making sense, and then you can compare your ideas to my ideas. And I really think that the chart of week is beneficial if you use it the correct way. So yeah, there's that. Cool. So moving on now to Fibonacci time. Okay, I'm just going to take a really quick drink. Cool. So yeah, Fibonacci time, like it's just so amazing. So I'll read out what I've put here. But many traders forget about the x-axis, obviously being the time axis, and they're so focused on the price of what's happening with the price. They very much forget about time, in my opinion. Okay, but time plays a crucial role in determining which waves of a move are linked together. Okay, so you cannot just put it this way: if you have a massive impulse and then a correction that takes, let's say you have an impulse that lasts 100 days, and then you get a drop in like 1 day, you would just be like, this correction is not enough. It's very unlikely that they're linked together of the same degree, and this is coming into Elliott wave theory a little bit, but degree of, if you get a 100-day impulse and a correction in 1 day, when you would say, well, it's unlikely that this correction is over and it's actually going to be forming a larger, more complex correction, because time is an element in trading that is very important, and you cannot just link things together and think that they are of the same move. As I move along with this, that will make more sense, I very much hope. But I'll leave that to the end of the stream. If you have any questions, save them to the end, I suppose. So if a correction happens too quick, should probably put TOO, but too quick, in compared to the preceding impulse, it is likely to mean that it is only the first part of a correction and there is still more to come. So that's kind of hinting. I forgot that I wrote that bit, but it's kind of hinting on what I was just saying a second ago, that you want to see, correction should take longer than the impulse. Okay, it's very rare. This is the thing. Trading is all about possibilities. Of course, there's no 100% guarantee, but all I would say is the probabilities are not in your favor. Let's just say it like that. So the probabilities are not good if you are looking at a correction that is shorter than the impulse. Okay, I would always be very wary of that, thinking, well, let's say we moved up in 10 days and we come down in 2 days, then I would be thinking, well, it's unlikely that now we start taking off again. It's more likely that we, come down in 2 days, back up in 1 day, back down in 5 days, and the correction is going to be longer rather than just taking off again, because in terms of probabilities, you want to see these corrections at least being a 1-to-1. Okay, at least being a 1-to-1. So if you're 10 days up, you're looking for 10 days down. Okay, hope that makes sense. It doesn't have to be, and you're looking sometimes at the 0.618, but generally the 1-to-1 plus. Determining the direction, price will be. Okay, so this is what I wanted to say by this. That determining the direction, the price will go. So say we're looking at Bitcoin. Okay, we've done technical analysis, and let's say we've determined that the price of Bitcoin is going up. And I feel that determining which way Bitcoin is going is quote unquote easy. It's not really. You think back the stream that I done, like, what was it now, 4 streams ago, I'm not sure, 3 streams ago, but obviously presenting the case for the bottom being in on Bitcoin. It was easy to know that Bitcoin was going up, but it's the timing that makes you win or lose money. Because let's say, for example, you thought Bitcoin was going up, but you buy on the 23rd of December, and then suddenly maybe you buy, you buy 7,400 thinking it's going to 9,400, but because you buy too early, you get stopped out on the move down maybe. So you were correct thinking Bitcoin's going up, but because you did not time your entry, you lost your money. Okay, and that is why time is so important, because you can guess, or not guess, I suppose, that's the wrong word, but you can use technical analysis to work out the direction. But if you do not know the correct time to enter, you can be right in your analysis, but wrong in your timing and lose money. And that is, as a trader, is frustrating, isn't it? And I'm sure it's happened to everybody here. I'm sure, 100% certain, that you have done technical analysis. Okay, you've determined that price is going up, but you get price stagnating for a few days, or you get price dipping for a few days before turning in the other direction. And time is an element now that you can be aware of, know how to calculate. So hopefully you'll see an improvement in your quality of trades, because this is an important tool. This is where chart geometry tools in general, such as Fibonacci time, are useful. Obviously you've got things like pitch fans and just like Gann fans, Fibonacci fans, I suppose, and other tools. Okay, Gann squares. There's a lot more spectrum than just Fibonacci time. But tonight's stream is definitely only focused on Fibonacci time, and I want to capitalize time there. But these geometry tools are all useful in this. So you could even class like parallel channels, to be honest, as a geometry tool. But in terms of these are where these tools come in helpful. Okay. Last notes before I get into the sheets and some really nice examples, I think. I love to use Fibonacci time in general, but when used in confluence with a harmonic pattern and, to be honest, Elliott waves, this is where it really excels. Okay, so you could use it on its own, but I think it's so powerful. Okay, let's say Fibonacci on its own is Fibonacci time on its own is a 7 out of 10. But when you combine it with a harmonic pattern or a very good Elliott wave count, then suddenly you're like, 10 out of 10, like beast god mode with how well corrections and predictions can play out in terms of, instead of just being, with Fibonacci and Elliott waves, obviously you can predict where price is going and sometimes do that to the dollar. But imagine being able to predict where price is going and then actually getting the day it happens correct as well. It's kind of like God mode, and people really then think like, wow, this guy's got a crystal ball. And it's really nice when, those sort of comments happen, I suppose. But it's all about Fibonacci and Fibonacci time, the patterns, bringing it all together. Okay, bringing it all together is like where the power is, I suppose. And yeah, I have some really nice examples. But yeah, let's go over first how you use the tool. So here we're just looking at Bitcoin. Let's just focus on the writing here though for first. Okay, so Fibonacci time is useful for determining when corrections and impulsive structures may end. Okay. Here, for example, on Bitcoin, I'm going to go over and actually go to charts and use the time tool so you can actually see me using it in real life. Let's say, using real examples to show you, because it's like one of those that it's really hard to give a cheat sheet of how to use this. It's really difficult to write a cheat sheet, and it's so much easier to just show you, much like the Fibonacci extension tool. So I'm going to go over some examples, actually real examples, so you can see. It's just a lot easier for me anyway to explain it than trying to write it up. But here we take the low up to the high. Okay, that's the time of the impulse, and as you can see, as you came down from the impulse, okay, surprise, the length of the impulse, what you'll be looking for is, I'll show you the templates that I use, but I use 0.5 and I use the Fibonacci numbers. As you can see here, length of the impulse, you hit the 0.618 and you had a 45% increase in price. Amazing, right? Off of the 0.618 Fibonacci time, you would have nailed that move. As you know, I nailed the move. And that's not bragging, but I did. And then obviously this one became on the 1-to-1 extension. As you all know, I joined the, I became active back again on the 6th of January. And this coincided with the 6th of January. And 1 day later, well, now we're obviously back at 9,400, another 45% increase in price. So this was 45%, this was 45%. That's 2 trades. And yeah, unreal. But yeah, like, this is an example. I'm going to load up the chart in a minute because I realize I haven't shown you how to use the tool, but just showing you the power that's in this tool. That firstly, the 0.618 time extensions was followed by a 40% increase in price, and then the 1-to-1 time extension was followed by a 25%. But since I've done this screenshot, we're up another $1,000. So yeah. So you do not want to blindly trade off of Fibonacci time alone, but use it as a bounce, use it as a confluence, okay? So the confluence is here, okay? So the confluence at the 0.618 was that you obviously, well, for me, I can remember very well. What you had here as the confluence was primarily the liquidity run here, okay? So it really was that. It was as simple as that. The liquidity run of those lows, you stopped everybody out, okay? And then it was the fact that you had the 618 just below you, okay? For me, this was a big thing. You had the 618 just below you. And at this moment in time, everybody was bearish, okay? After this drop, everybody was bearish, okay? So what are you thinking here? Everybody's bearish after the drop, okay? Everybody, or a lot of traders, are going to have got stopped out at this point because you've taken the lows, and then a mixture of everybody being bearish and everybody wanting to buy in at the 618. What is that a recipe for? That's a recipe for front running the level and pushing price up, and then you get the FOMO crowd in of everybody that's waiting for the long, missing out, having to buy up higher. Yeah, it was just a really nice recipe of that one, that you like. The confluence that you had at that level was primed for the rise. But then one must say, when we think about it sensibly, that this 0.618 was too short, if we're honest. It was too short of a time because impulse, it's unlikely in terms of probabilities that was the end back in September time, and it was off to the races, because the corrections are generally the 1-to-1 at least, okay? And then that comes to where we're bouncing around the 6th of January that you had here, you finally hit the 1-to-1 extension. Again, this is fairly short. Okay, so this is still a short correction time. You generally are expecting 2 to 3 times longer. Okay, but again, we can trade the bounces that happen on these corrections, but nevertheless, that also led to another increase in price. So let me use that one as an example, and I'll show you exactly how to use the tool. So let's load up Bitcoin here. Okay, so how you use the tool, what you're going to have to do is come over to the left here, and it's actually called, what do they call it on this website? They call it, it's just because I use a lot of trading platforms, and each platform calls it something else. So if you use Sierra Charts, it's called something else. If you use Trading Technologies, it's something else. If you use Ninja Trader, it's called something else. So like for some reason, every platform has its own name for the tool. So here it's actually called, I cannot see where it's listed. Okay, so it's called Trend-Based Fibonacci Time. Okay. Fib time zone is another tool, really similar but different, and I can do that in another video. But yeah, for today we're focused on the trend-based Fibonacci time, and it requires 3 clicks, much like the Fibonacci extension tool. Okay. So how do you use this tool? So let's say we want to look at the length of this impulse and then imagine how long the correction could take. Okay, so trend-based Fibonacci time, 3 clicks, remember. You are going to do your first click at the bottom or the low that you're looking at. So you want to monitor an impulse and then look how long the correction could take. Okay, so you click once at the bottom, at wherever your low is. It doesn't matter. Looking at the price axis where you do it, okay, as long as you're at the correct day. Okay, so from clicking once there, you're then going to drag up. Again, it doesn't have to be, you don't have to click the high, it can be anywhere on this axis. I could click here, as long as it's on the same day. So from the low there on, what was it, the 14th, 15th of December, up to the high here around the 26th of June. Click once, and then you can then extend it again, and I'll go over an examples of why you would extend it in a second. But for this example, we just want to know from the origin of the impulse to the top of the impulse, and then just click again. So it's just double click essentially. So let me do that one more time. Low of the impulse up to the high, and just double click. Okay, once you double clicked, you're going to see you will have your Fibonacci. Well, actually I've got 2 templates, so let's do the Fibonacci one first. And you can see this. Sometimes I will add in other numbers like 0.382, 1.382, for example. But yeah, we'll just stick with 0.6181, 16182, 2618. Okay, and you can see here how brilliant it works out. That there's your drop down. Okay, if we just zoom in here really closely, you can see the drop, that really big drop that happened. It happened exactly, by the way, on the 0.618. Okay, and then you can see on the 1-to-1 how, you know, basically it times the day before a very big increase in price. Okay, so yeah, that's how you use this tool. And we can say the 1.618 is the 3rd of May. So yeah, that's how you use the tool for looking at extensions. And don't worry, I'm going to give you much more examples. I am definitely going to give you more examples, but I want to just show you the other template that I'll use, and this is the 0.5. Okay, much like think back to the Fibonacci examples that I've done for waves. It was waves, you remember, where I gave you the 0.5 Fibonacci retracements. Okay, and I didn't give you examples of waves on Fibonacci time because we hadn't covered it yet. But waves was actually moving down on the 0.5 Fibonacci multiples while each impulse was going by a 0.5 Fibonacci time. So like, yeah, it was kind of unreal waves, to be honest. But this is another template that you can use, and this is for this example, what I'm going to do is I can't remember this one, so let's just what was I going off of on this screenshot? From the high, okay, so from the high all the way back here. Okay, so how long this correction was, okay, to when your next potential move could happen. Okay, so if we go from the high, and that was obviously, what day was that? So we click once on the 17th of December, okay, click once at the high, then down to the lows on the 14th of December, and then just double click. Okay, and what we can say is linking for how, and this is going to come to a harmonic, by the way, in a second, but when we were just looking here for how long the correction took. Okay, so how long this correction took, what we could say is this is all still correcting. Okay, so you know, we have to think that it's still possible. Okay, it's still possible that we're making new low. You know, you have to think it's possible. Is it the most likely though? But you know, but it's possible that we make new lows. So we have to say that this is technically all still part of a correction. So This length of this correction, okay, that's clearly your 2018 bear market. That took, well, it doesn't say in terms of how many days there, but we can say exactly that took something like nearly a year. So that took a year. What we can say is this segment of the correction took a year. Okay, so if we're looking just in multiples of fib times of likely places we could see reactions in time, okay, what you can see is at the 0.618 of the last correction, you did, funnily enough, get a very nice increase of 30%, and this one has timed the lows of around 30% again. But that's just seen multiples of lengths of a correction, and this is going to make more sense when I get to the harmonic that I'm going to show you in a second. So please bear with me, because this is going to make more sense of why you'd look at the correction shortly. Okay, so bear with me. Okay, so Fibonacci time. So there, this is just another example, okay, and this is off of the. So this is one that I obviously gave in the why I thought Bitcoin could potentially bottom out. But what you can see here is I think this is absolutely outstanding. I truly think that this is just yeah, absolutely outstanding. So what we're doing is we're going from the, around that 2000, the start of the 2011 bull market. What we can really say is the inception of Bitcoin. What this is trading at around $1, so more or less the inception of Bitcoin. Okay, or when the 2011 bull market started, which is basically the start of Bitcoin. So what we can see is after that, crazy increase in price that we saw, that was obviously the where we start to take these from. Okay, and if I just load up the chart, I suppose. I can't remember what chart I was doing this on. I suppose it doesn't really matter so much. I kind of don't want to delete everything. I don't want to really delete that. Let's just, I'll just talk it through on this print screen. It doesn't matter too much. But basically all I've done is I've clicked at the 2011 low. Okay, so with the tool, you click once at the 2011 low, or it doesn't really matter so much the chart you're doing on, but one click at the low and then 2 clicks at the high. So it's that simple. 1 click at the low, 2 clicks at the high. Okay, really simple, and that's going to give you your Fibonacci expansion in time. Okay, so what you can see here is just how the Fibonacci numbers were so influential to the market, so influential. So from that 2011 low up to the high, 1 click at the low, 2 clicks at the high, that's going to expand the first impulse. What you can see is the correction here. So what we can say is that let's just make statements, and from these statements, okay, facts, we can say, use this to build a case for the future. Okay, so this is a good way to build cases of what's the most likely to happen, using data from the past, building that data into statistics and saying, well, that's more likely in the future. So what we can say is that 2011 to 2013-ish high, that finished its bear market in 0.618 at the time. If you remember, where did I have it loaded up here? 0.618 at the time, you had a massive, had a massive rise. So when we think about this, that this impulse, this was 350%, over 350%. It's a massive increase in price. What we can say is, you come back down on the 0.618, and then you have a 45% increase in price. So what we can say is, generally, okay, Bitcoin, I would just say there's a fact that Bitcoin likes to correct sooner than the stock market. So where in a stock market you can definitely have corrections that last a long time. Okay, well, this is so specific on individual stocks because obviously the S&P 500, for example, is just up. But all we say is like the corrections of stocks, are generally more longer, and it does seem that there's a phenomenon in Bitcoin where these corrections are short lived, and you kind of get a big impulse, shallower, smaller in length of time correction before moving up again. So that's just something to bear in mind of how you can be using this to build cases. But here we can see that you hit the 0.618, and that's when the new impulse again starts. Really clear that this this low between the 0.618 and the 1, because what we can say is we really went sideways in this whole period. Okay, so this period of nearly a year was more or less sideways. So from the 618 to the 1-to-1 extension, I would say that really the bear market has ended here, and you begin the new bull market. But at the 1-to-1 extension, that is when essentially that 2016 to 18 bull market started. Okay, and then at the 2-to-1, the end of the bull market ends. The bull market ends and the bear market begins. Okay, and then at the 2.618, okay, 2.618 to the day, you get the start of the bull market. Okay, so just look how accurate this is. Just look at it in terms of like, wow, look how accurate this is, timing the highs and lows. So from the low to the high, double click at the 0.618. This might not look a lot, but this is a big percentage. By the way, it does move down. But look at it timing the high here. Look at it timing the start of the impulse here. Look at it timing this retracement. This is weeks, by the way. 3-week downtrend before the uptrend resumes again. Look how close it got to timing the highs. Okay, so we're talking about a few weeks from the highs. And then look at it, it got the exact week of the 350% rise. So what we can say is this is really, 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 really influential. There seems to be a lot of importance placed on these time figures. Okay, and then we can say at the 3-to-1, possibly we're beginning a new uptrend. Okay, so 3-to-1 so far has caused a major move. Okay, now even more than this, 45%. But this is yeah, just nice to see when building a case. Okay, so yes, there is that. And obviously, if you go back to the stream that I had a few weeks ago, you'll know that we had more Fibonacci time confluence. So it wasn't just this low to high and here getting the 3-to-3, but we had like 4 different pivots of why we could potentially build an uptrend here, which we have done. So I'm going to go over some examples now, so you can actually see how we're using this tool properly. Okay, and the first example that I want to give to you, I really hope it blows your mind, because I just feel that this was absolutely amazing. Not to blow my own horn, but it kind of was. And that was this shark harmonic pattern that I had here. And I'm going to load up the post in the group that I put so you can read and just see how nice of a prediction it was, basically. So this was a shark harmonic that I posted in the group, just throwing out some ideas, but what my exact words were, using Fibonacci time, we can still expect a rejection from here to put in a low before a rise in price of this harmonic. Okay, reclaim 8,740, and it's less probable. So what I want to talk you through my thought process, okay, because my thought process was correct in my thinking, basically. So it's kind of invaluable that you learn this. So what I was looking at with this harmonic, firstly, it was really nice. The way that we had this range to then drop down, the way it's all building up a case. Okay, that's what we're doing when we're trading. We're building up a case, because anything is possible. Okay, and this is what I love to say now, like, anything is possible, but is it the most probable? Okay, so that's what you want to be saying to yourself every time you take a trade. People are going to say to me, Daniel, is it possible we go to 3,000? And I'll say, yes, it's absolutely possible, but is it the most probable? Okay, are we going to $1 on Bitcoin? Yes, it's possible, but is it probable? So that's just a question you want to be asking yourself. But here, basically, I did believe we were going to make a new low. Okay, I did believe this was going to come down again, because of the fact we had put in the length of this correction here had not reached the 1-to-1. It wasn't bouncing off of a perfect 0.618. This was at a random point in time. So I just felt, using confluence, okay, of the fact that we were retesting old support. So old support here. So what we can say is there's the candle close. So really this is just a resistance zone. So as we were seeing this, it's more likely that we come down, okay, test these lows, test the 1-to-1 extension in time, and that's more likely. Okay, and that's why I put, using Fibonacci time, we can still expect the rejection here. Because this was too quick for me. This was too early to envision the move up. Okay, and now let's think about this. As we all know, we're sat at 9,500, well, 9,300. If you had bought 8,400, okay, looking for the target of 9,300, you were right in the direction that Bitcoin was going, because we did move up. But if you bought in here, well, I think it's really likely, because we moved down to the lows. I think it's really likely if you bought here, you would have got stopped out. Thus, you had the direction correct, but your entry timing was wrong. And, I don't know, because I don't know how you trade, but very likely if you bought this high, you would have got stopped out on that drop, and then you potentially might miss the move, for example. So this is why timing your entries is so important, because maybe you also thought we were going 9,400, but unless you timed the entry, you would have missed out the move. Okay, and this is like, I just have to say the prediction was kind of nice, that here we were at the time. This is how it played out. Okay, so we did in the end. Okay, so we did in the end. I'll load up the chart in a second, I suppose, but we did in the end go to those closes. So close. All we done was we come up, we retested that, got rejected, and we came back down, put in a higher low, by the way, at the 618. So you see how, let's just load up the chart. Let's just load up the chart. It would make much more sense. So let's come back over to here. Let's go down. And I think I have this saved. No. Oh, I hope I got this saved somewhere. Local. Yes. Well, I kind of thought I might have deleted it. So yeah. So here we go. This is what I wanted to show you. So I have removed some of the levels, haven't I? So let's put those back on. So yeah, what we had was a move. So let me I really just want to talk you through the thought process, really, because yeah, it was nice. So obviously at the time, okay, when I was posting that screenshot, I was envisaging, at least, to move back down, okay, it may be putting a new low, okay, maybe putting a new low, or at least just envisaging that this is not the start of the impulse. Why did I not envision it was the start of the impulse? It was because if we load up the chart, okay, and I'll show you how we do this, this move was too quick, okay? So what we're looking at here is use the Fibonacci time tool, okay? So what do they call it again? Trend-based Fibonacci time. And what I'm looking at here is well, really what I was looking at the time was this move, okay, downwards to B and then extending it on, okay? So what I'm going to do is I'm going to click once at the start of X, okay? Click once at the start of X and move it across to B. Oh, I clicked the wrong tool. Click once at the start of X, move it across to B and double click, okay? As you can see, okay, as we can see here, that's basically I was looking for the one-to-one, okay? So in the print screen I was only really looking at the one-to-one, because this is why confluence is really important. Just looking for the one-to-one just doesn't make sense on its own. That just wouldn't make any sense. But because of the fact we were running into resistance, flipping it in, running into old support and flipping into resistance, it's building the case of, obviously it's possible that we could have just blasted through everything and just gone straight up from there. But, is it the most probable that you do that? And it's not, is it? So, the reason I was looking for the one-to-one is because of this resistance support flip and envisaging to get either new low put in at that point in time, or at least move sideways until that point in time. And you can see in the end, what we done is we come down, okay, we did get rejected from there, come down at around the one-to-one is when you put in a low, and, this started to get very impulsive indeed. Okay, so that was like the theory, and I hope that kind of the theory side behind that one helped. And I think I have another example of it on this chart. Oh yeah, I do actually. Yes, I do. I'll show you then what you're looking at. Okay, so this is now where harmonics come into play. Okay, so I want to teach you. I want to teach you how you use harmonics and relating waves to each other. Okay, so obviously we all know in a harmonic we have X, A, D, and C. So you like to see relationships between these waves, okay? The relationships that I like to see are 1-to-1 and 1.618. Okay, those are my two favorite relationships. So just simply a 1-to-1 extension, or just simply a 1.618 extension of the waves. Okay, so again, there's no 100%, but that's what I like to see. So what we can see here is this rise. Okay, firstly, there's no relationship, is there, from X to A? Look how this doesn't take long at all. Okay, so there's not much time between X to A and B to C. Okay, so we're actually C ends here, doesn't it? So there is no relationship really in these waves. In a harmonic, though, the most important relationships are A, B, C, D. Okay, go back to the harmonics. I can try and load up very quickly a very quick cheat sheet for you of these harmonic patterns. So for an example, when you're looking at the crab pattern, then the 1.618. So this, people probably might have not understood what I meant by this, but AB equals CD. So the length of AB is a 1.618 extension in time. So that's what that means, by the way. And when I put AB equals CD1, you look for just a one-to-one. So I hope that makes sense now, because maybe it didn't when I wrote that cheat sheet. But yeah, basically that's what we're looking at. So A to B, what we're looking for is the 1.618 extension in time. I'm going to remove the local levels a second, leave on this, and then look at the power. Okay, look at the power of this. I want to load on one more thing because I want to blow your mind with how accurate this was. Okay, so don't know why I was in log. So yeah, this is where it then gets amazing, and I just want to show you how absolutely brilliant this was. So this was I'm not going to be able to find this post on stream because I don't want to I kind of want to find the post, I'm not going to bother wasting time to find the post. But basically, while we were sat here yesterday around 8,900, I posted in the group, I'm looking for the 1618 extension of the Fibonacci channel again. Okay, so this is a Fibonacci channel, very simply taken from the low to the high here. Okay, so connecting the lows, moving up to the highs. And I just think it's perfection when we use Fibonacci time with this to just show you how amazing the 618 is. As we all know, from this low up to this high, low to high, we came down to the 618. Where did we go from that 618? We impulsed up to the 1618 of the Fibonacci channel. So this is where it's just coming all in at the moment. Like, Fibonacci is amazing. So from low to high, we came down to the 618. We impulsed up massively. Okay, impulsed up massively, and we came to the 1618 Fibonacci channel extension. From the 1618 Fibonacci extension, Fibonacci retracement, Fibonacci channel, we got, sorry, there's just too much. We obviously got a rejection there. That was also our monthly level, 9,150. So again, confluence at the level. What we had was we dropped down. Look where we dropped down to the dollar, to the absolute dollar, the 6.6. And this is the 6.6 of the Fibonacci channel. Okay, so our Fibonacci channel here, we went to the 1618 extension of the Fibonacci channel. We retraced down to the 6.6. I mean, how amazing is that? And then on my post while we were here was, I'm looking again for the 1618 Fibonacci channel to come into play. And what did we do here? We moved up to the 1618 Fibonacci channel. Okay, and you can see how, I mean, $1 or $2 off of that is where we hit. But then this is where it gets amazing, what I'm going to show you right now. And this is you get now using the trend-based Fibonacci time. Okay, so now we're looking at AB to equal CD. Okay, AB equals CD 1.618. Low of A, so the low of A to B, so this requires now three clicks, remember, because before we had just been clicking twice, but that's not what we're doing when we're using this harmonic. We want to know the relationship of AB to CD. So we click once at A, we click once at B, and then we drag it across to the low of C. What you can see here is, firstly, the 0.618 and the 1 were kind of influential, but what I think is amazing here is the way, and let me just hide everything so you can pay full attention to what happens. This AB equals 1.618. Here we went to 1618. It was the high to the exact hour, to the exact, absolute exact hour. So that is just showing you, I really hope that's showing you how amazing this is. Okay, so it's the confluence. It's the confluence of me saying, you know, back at 1 a.m. in the day, 1 p.m. in the day, saying I think we're going to the 1618 Fibonacci channel extension again. So I made it clear I was long. That's what I was looking for. And what did we do? It's the fact that we went up to that, to more or less the dollar, and the high was at the exact hour of the 1618 time, and that's exactly what you look for in the harmonic. So I just think that this one was absolutely just mind-blowing amazing, and I hope that that's kind of blew your mind of how that has played, because it's just you cannot get better than that in trading. You just cannot get better than that. To firstly have the have the ideas of firstly just the idea that could play out, and then the idea of that you have to come down and see, just all of it together, I think is kind of mind-blowing. But the way they actually then traded out was obviously brilliant indeed. So yeah, there was that. And now I will go over in trying to explain in a little bit more detail this again. So A to B, C to D. So let me just click one more time. So remember, this is using all the harmonics. Okay, what you do is click once at the origin of A, drag it to B. Okay, and then third click will be at the low or high of C. Okay, and we will click once more, and that obviously then is going to give you your that is going to give you, I didn't click on it, that is going to give you your extension targets in terms of time of when you're expecting reactions. Okay, and these are the templates if you would like to copy, and the other template that I use is 0.5 if you would like to copy. I prefer the Fibonacci one naturally because I'm more of a Fibonacci trader, but it's nice to have the 0.5, especially on the longer term. Okay, when you're looking, for example, the stock market is better on 0.5. Well, not better, but yeah, you just want to see what you want to do. Okay, is maybe put on both. And what we could say here is, Well, firstly, harmonics are all about Fibonacci, so I wouldn't say with Fibonacci, with when you're using harmonics, you want to use the fibs. Well, why would you use 0.5? Because this is all based off of Fibonacci, I suppose. But if you're looking, if you're using Elliott waves, okay, or if you're just not using Fibonacci to determine where you're going, then the 0.5 is more of a standard, I would suppose. Okay, so the 0.5 is a bit more standard. If you have any questions, please ask, because I'm not sure how well I've explained that. But yeah, if you have any questions, you're just going to have to ask, because I'm not a mind reader. But yeah, I hope I've explained that why you'd use Fibonacci over 0.5 levels. Okay, so it's more if you're basing trades off of Fibonacci, use the Fibonacci time levels. Whereas if you're not using Fibonacci, then yeah, the 0.5 are generally more accepted. Okay, so there's that. And now I have some more examples for you all. Okay, so a few more examples. Okay, so let me remind myself. I think I had gold, phantom, and something else. SQ. So square, gold, and phantom I want to go over. Cool. I couldn't remember. Well, I could remember actually, but so let's start with gold. Okay, so again, it doesn't matter the asset. I mean, the asset you're trading is irrelevant, really. No, because it's going to be the same across all markets. So let's just come up to a higher term time frame here. I'm just going to take a drink really quickly. So this is obviously one of the biggest market caps in the world. Okay, there's obviously a lot of money that flows through gold. And apologies that I am on looking at this on Oanda, so it's not going to have all the massive amounts of history. Okay, obviously, because we are not on that's just the exchange, the data that I use when I'm trading gold, so that's why we're going to be focused on that one today, basically. But what we can see here is this is a Gartley harmonic pattern, okay? And I mentioned this briefly on the Champions live stream last week, I think. But basically, this is a Gartley harmonic pattern. Okay, and I've mentioned the similarities of this and Bitcoin. Okay, so I'm going to go over the Bitcoin Gartley as well, actually, in a second. Remind me, don't let me forget the Gartley on Bitcoin, because I want to cover that one. But this is a Gartley on gold. Okay, so what we can see is from X to A. Let's just delete this a second. From X to A to B, B to C. What have we done here? X to A impulse, then we've retraced to B to the 618, then we've impulse to C, currently to the 618. But there's no saying that we cannot push up higher here. Okay, that's absolutely possible, and I'm not too sure whether this is a high, so we could definitely push up to like the 786, for example. I'm okay with that. So yeah, I'm totally okay if that pushes up. I'm not shorting gold at the moment, so if it pushes up, then so be it. But basically, it's still valid if this pushes up higher here. So we're just envisaging, currently there's no reason to be bearish on gold until it changes market structure, and currently the market structure is bullish, so this could definitely push up higher. But anyway, let's just say for the sake of an example, we've got the high of C in here. So this downtrend here, what we want to see is the relationship of A to B to C to D. Okay, so what we're going to do is trend-based Fibonacci time at the start of A to the low of B, and then click at the end of C. That way, let's just envision this is the high and we're moving down. Where we'll be likely and imagining this will end in terms of relationships between the waves of the harmonic pattern. Okay, if the length of B took this long, we're expecting the length of D to at least be a 1-to-1. That means you could expect, if this is a high, for the low to be put in on gold in around 2024, so about 4 years. Okay, and that's absolutely fine for a major pattern like this. 4 years it could potentially take, and we're going to say anywhere from 4 years really to 6-7 years. So what you could envision playing out is something like this. Maybe you get a push up higher, and it plays out something like this, here, and then you don't end your pattern until nearly 8 years into the future. But then that would give you your Gartley finished, okay, with a sensible AB equals CD time. All I would like to say is obviously the fundamentals of what's happening in the world are going to have an influence on gold, because it's a highly it's just obviously used as a massive hedge, I suppose. So if the economy kind of goes AWOL, then this is obviously going to be invalidated, and we probably, if we're honest, we're probably just going to do that. So obviously there's more to it than just fibs on gold, I would like to say a little bit. But yeah, that's just one way that you can use the tool. Okay, and then when we load, I didn't want to delete that. When we load back this harmonic, okay, what we can do is say, let's say, obviously what we can say at the moment is we can safely say we don't know C's in, okay, that this is not looking like a top, okay. So when we think of it like that, what we can do is look at the relationship between XA to BC, okay. So Fibonacci time from the low of X, again, this exchange is low, to this exchange is high, and then extend it to B, okay. What we can say, okay, it's likely then that this is not over, because the length of this impulse correction, if the length of the impulse is going to be in the same kind of degree as this, it could definitely move up from here. Okay, and I'm not bearish on gold, but you know, if we're just playing it for the sake of education, then what we can say is, you know, there's still left or space in this C to rise, and what we can say is there's anywhere really between another year left of this. Okay, so this could rise for another year, 2021. Okay, March 2021. And if we just ignore the harmonic and go off of time, then what we could say is this could rise if this is like an impulsive structure, and this is some sort of 1, this is a 2, this is a 3, for example. Okay, so let's do an example of Elliott waves then. Okay, so if we imagine this is wave 1, this is wave 2 correction, let's just say for the sake of an example, I'm not saying this is what I think, but then let's say we go from low to high to low, and then we put on extensions. Okay, so what we could say is, I mean, generally you're looking for the 1618 extension, which is obviously miles away, but at this moment in time it's possible. So if this is a third wave, what we would say is we're looking for you know, massive increase in price. Okay, with that massive increase in price, yeah, this would easily be taking, you know, you're going to be talking about 1618 at the very least. So if this is truly going to be very bullish indeed, then what you could say is you could be looking to top out, okay, in terms of time. You know, again, this is because it's such a big time frame, it's not too useful, but you know, anywhere between the 27th of May 2014 to the 1st of June 2000. Did I say 2014? 2024 to 2026, the 1st of June. Okay, and that's just taken from the length of the impulse. Then you'll move down from that impulse, and then if you're envisaging this being very bullish indeed and the correction's over, then you come up and do that. Okay, but then let's say, is this the most probable? Okay, so again, it's a bit of a pity that I don't have all the history on this chart, but never mind. What we can say is, let's just say that's the length of the impulse. Okay, is it likely that this correction is over? I mean, you can see here, kind of like Bitcoin, I suppose, that it started to move up it started to move up bullishly from the 1-to-1 extension. Okay, so from this 1-to-1 extension, but one has to say, being such a such a market cap, although possible this could absolutely take off, and I think if there's an economic crash it probably will, but if we're just using it in terms of what's more likely, what's more probable, not thinking that it's gold, then I think it's more likely that you do get this Gartley play out. Okay, I think it's much more likely that you get the Gartley play out, come down to a time that's around the 2618. That way your impulse, the correction is coming to a much more sensible time, okay, because this is a macro correction. Okay, and then that would give you your X. Let's say we top out here and we come down. Okay, but that would, in terms of time, give you a much more realistic expectation. Okay, length for the impulse. When you could possibly envision the correction to end. Okay, so again, it's a long time off, but I wouldn't say I'm so focused on that on gold, because gold is it's just really driven by how the economy is going to be going. So yeah, it's a bit of a it's just just think about that. You're talking about a massive term play out, but yeah, that's how you use the tool. Okay, then I wanted to go over an example on Square, so a stock, and then I'll go over a cryptocurrency example. So Square, what we have here is another really nice harmonic pattern. Okay, so let's come down. So I'm losing my voice. I am going to have to take another drink. Okay, sorry. So yeah, this is another harmonic pattern that I'm looking at on Square. If we just remove that a second, and yeah, this is really nice with coming outside of this. So I posted this, by the way, on the group last week. I posted harmonics for McDonald's, Square, and Nvidia. They've all traded Nice. But yeah, anyway, this is obviously how we could be looking for time relationships. Okay. So you might see that I've put the D up here at around, May, April time. Okay, what I'm doing here is the Fibonacci relationship A, the bottom of A. So let's just click so it looks really obvious. So the bottom of A to the top of B, and then the third click is going to be at the start of C. And I'm looking for the one-to-one extension. So the relationship of this impulse, I want to see the relationship of this impulse to the next impulse. So what I'm looking for is this to play out. Really at the one-to-one, okay, because it's it's nice. So I'm looking at the one-to-one. So around the 30th of April to the start of May, around that period is when I would be looking at potential signs of this turning around, basically. Obviously, the harmonic would also lead you to believe that we could turn up, 786 to 886. You'd be looking for this to turn around, okay? Doesn't mean that it has to. And overall I'm more bullish on Square, if I'm honest, okay, stock market in general. But yes, that's all I would say. That's the time that around that sort of time I'm looking. Okay, it could be anywhere though from the one-to-one, and this is where you need to use confluence. Okay, so what confluence do you have at this time at that level? Okay, if there's no bearish confluence and everything's still looking bullish, well, that's when you would look then for your next extension, which is going to be the 1618. Okay, and that's coming in at around September time. Which would make more sense, I think, for a turnaround. Maybe break up to all-time highs, for example, and then take it. So this is what I want to just stress, that you don't just blindly short because you're reaching a one-to-one extension. That's just crazy. You definitely don't want to do that. What you want to do is use the tool sensibly and look for confluences at the time when you reach the level. Okay, so that's the takeaway, I suppose. Don't just randomly buy and sell things because it's reached a Fibonacci time. That's really the wrong way to do it. You want to use the confluences, build up a case. And if you have like really bearish, let's say you had bearish divergences, you're coming up to a Fibonacci number, you've built up a really big case of a bearish case, and then you're also coming to the extension of time, well then that, is kind of like icing on the cake, and you've built up a really good case to go short, for example. But if that is not happening, or you have the time and everything is looking really bullish and healthy, then, you're not going to just short because of that, okay, because, that would be crazy. So that was Square, and the last one I want to go over here is Phantom. So Phantom. Okay, and this is a lovely example, I feel, actually. So what I'm looking at here is for when we could put in the low of C. Okay, because obviously it doesn't look like it's bottoming out at any time at the moment. So if we're just taking it sensibly and looking at relationships, so what we can say is this downtrend from X to A, that downtrend, we're going to take the Fibonacci time from the start of X, from the low of A, and extend it from the start of B. That way we're getting the relationship here and extending it from this low. Okay, and what I would say is I would like to see this low put in around the start of February. Okay, from the start of February, if we bounce off the 1414, and this is where I'm thinking about what I would like to see. I think it might be drawn more towards the 1618, and that's at the 0.7. That's at 77 sats basically. And if we look at that, then I think it's more likely to drag out longer. Okay, more likely to drag out longer. Maybe you get something like this, but ultimately coming down to the 1618 on the 1618 time, and that would actually be amazing confluence at around the 20th of March. Okay, so yeah, you might see something like this, retest, and then back down. And if you got that, okay, on the 12th of March, that around that sort of time, give or take a few days, onto 77 sats, well then you have a really, really good confluence. Especially, let's say, for example, what you could build up a case of is, let's say you get some falling wedge happening here. Maybe we do something like this, a falling wedge with bullish divergences onto the Fibonacci time, onto the Fibonacci expansion. Well, then you're suddenly building up a really, really good case to go long, aren't you? Yeah, you can see how that could be possible, that we could, thinking ahead, you could build some sort of falling wedge here onto that level, bullish divergences, and yeah, you've already got starting to build bullish divergences on this last drop. So yeah, they're already starting. So that would be nice, wouldn't it? Just, that's would be nice. So yes, and then I suppose let's just say for example we do bottom out at that time. Okay, so we do, let's say, bottom out there, and then what you will be doing then is looking at the relationship of AB to equal CD at least 1618, because it's a very, very big rise in the price. So from the bottom of A to the top of B to wherever the low of C may be, Okay, you're looking for the really that 1618 at the very least. It could take long because of this is such an increase in price, and it's like an altcoin. So yeah, but yeah, you'd be looking for that relationship, and that would, saying you bottom there, you would be looking for it. That again, we don't even have C yet, so this is just for theory education. But you'd be looking at, let's say around the 20th of April. Again, that's how you like use it to find confluence with timing entries. Okay, timing entries, which makes sense. So I guess I wanted to say a few notes, okay, of how beneficial it is to time the entries. Okay, so let's just take a random chart. I guess we could just stay on this for now. Let's say, for example, on Phantom that we bought now because you I guess let's say that I guess we want to go over really something that's moving up. Okay, I guess the best example is going to be Bitcoin. So I'm going to use Bitcoin a second. I'm just going to remove everything from the chart. Again, I'm not necessarily expecting this to happen because I'm not actually bearish on Bitcoin at the moment. But let's just say that this was the impulse this was an impulse leg, okay? And again, this is not correct, but let's just say we're looking at it like this, and we're like, okay, there's 5 waves up, we're finished, and now we're expecting some sort of ABC. Let's just say we're expecting that, okay? Just for educational, not what I'm thinking, but let's say that this was the impulse and now we're looking for a correction. Okay, so if we take the low of the impulse to the high of the impulse, double click twice. If we do this, okay, we're expecting a correction, and we get a move down in price, and your move down in price comes to the 20th of February. What you're going to say is that's too quick. It's unlikely this correction has finished and we go up from here. Okay, that'd be very unlikely. What it's more likely is that's the first leg of your correction, and then you get a second leg of the correction before a third leg of the correction. And then maybe you could view it like this. That was a ABC zigzag in the A. That was maybe an ABC zigzag in the B, and then you form 1, 2, 3, 4, 5 down in the C to go 3, 3, 5 and put in some flats. But that's I think this is really key. Again, I want to cover Elliott waves, but too many times I see people thinking that a correction's over when it's clearly not, because you have to really think about time. If you see an ABC down, let's just say anything, doesn't matter if you don't know Elliott wave theory, let's just say you see a correction, okay? Let's say you see a correction and it happens so fast in comparison to the impulse it's preceded, it's very unlikely that that's the end of the correction and you just go up. You have to think that's the first leg of the correction, and there's more correction to come. Okay, it's going to be complex, it's going to go sideways for longer. Maybe you put in some form of triangle, okay, and then you break up. But what you have to say is it's just not correct to think that a correction is going to be quicker than the impulse, because it's very rare for that to happen. Okay, it's pretty rare for it to happen. So you want to see the corrections taking longer than the impulse. So let's say that was the high on Bitcoin and we want to put in some sort of triangle, whatever it may be, then I'm not thinking this, but then we could say that we would like to see that triangle to potentially end around April time, for example, and then we've had a correction that meets the requirements of this, and then we can be looking for upside. Again, I'm definitely not thinking that this is just a random count I've put on the screen just for educational purposes. So that was just a random, but that's the way that you have to think of, is a correction over? Again, you don't have to have Elliott wave theory for this, just the fact of saying impulse correction. You're looking for at the very least 0.618. Okay, so at the very least we'd be going from low to high, double clicking twice, and say at the very least you'd want to see your correction to go to the 23rd of Feb. So if it come down very quick like this, you wouldn't think, well, that's it, then we're just going straight up from here or whatever. You would think, okay, this is probably the start of a more complex correction, and we get something like this before carrying on. Okay, because it would just be too quick to think that that's the correction and it's gonna end. Okay. So there's that, and I'll give you like another random example of what I'll say is someone comment any random coin or a random stock. It can be anything in the world. I'll take one example, and I will do a Fibonacci time example. Whoever comments the first one is what I'll do. Let me read some of the comments. Um, yes, time is like the fourth dimension. Yeah, like really, it's so important to think of the time aspect. It really is. And I think because it was like a real life example, I feel that this was just a lovely example to give you all, because this is what happened on Friday. The way that I thought we would get that move down, we get the move down, and then the way that we've come up here to, I was looking for around 9,500. The way that we literally have now hit 9,500. I just feel that this was like a perfect example to show you the importance of time. That if you had, when we just load back up the pattern, just to really enforce the importance of time. If you had bought here at the top, you would have missed out because you would have got stopped out on this leg. But when you think of in terms of time, that you would have expected this to got rejected, and it's not just because the one-to-one was here, but it's because you're using it in confluence with saying that this was a support resistance slip. It's unlikely that you just carry on. The first time you test a level, it's more like you reject and then go through the second time. Okay, so when you start thinking of it like this, it makes sense. Okay, and on the same viewpoint, okay, when we look at the length of A to B and drop it, always do that. When you take the length of A to B and we drop it from the start of C, okay, one of the other reasons why I thought we would move up yesterday, I was really bullish at this point, and another reason I thought we'd move up is because we're not at a Fibonacci time point. Okay, so this was for me just like a really nice, we just had, nice little cup in hand, or however you want to view it. It just was like primed to move up. Okay, it was primed to move up there. And it's nice, the way that we done that. Okay. I will load up a really nice, I think I've covered this, I already know, but I'd like to show you this other section that will be really nice to like show you. Apologies if you've already seen me talk about this, but the secret to market success is anticipating the anticipations of others. And then yesterday, I was saying to the group that I think everybody wants to buy in, okay, and a lot of shorts have opened from the swing failure pattern, so that's another reason for the leg up, okay, and that's why we were sat here. That obviously we had the swing failure pattern of this high, where we took the high and then dropped down, and that was a recipe for another move up, funnily enough, in my opinion, because after the swing failure here, everybody became really bearish. Okay, so you have a lot of people becoming bearish, opening aggressive shorts. On top of that, you have the other crowd of people that are bullish and have missed out on all the move, but they are actually just waiting for lower prices to buy in. So you have people that are opening up shorts. The bears are opening shorts because of a swing failure pattern. A lot of the bulls are waiting on the sideline for lower prices because they're too scared to buy. And that gives you a recipe for another wave up, okay? Because you've got a mixture of, just like when we reached, okay, so it's the exact same example of when we reached 7,400, okay, so when we reached there for the first time, you had bears really bearish, expecting lower prices. You had bulls wanting to buy in at the 618 lower, so they're all sat on the sidelines, not in the market. It's a recipe for a really good move up in price. And the exact same was, in my opinion, yesterday, that you had the bears overly confident, you had the bulls actually on the sidelines waiting, and then that's why you get these movements up. And I agree with this totally, that it's not all about technical analysis. It's also about using your mind, using your sense, and thinking what others are going to do, and knowing that the majority of traders are wrong. The average trader loses money. The average trader is not going to make money, period. So when you think of what the average trader is doing, exactly what I was doing yesterday, then I can use that in for my own confluence and my own reasonings to building up a case, okay? And I have to say that this reasoning was why I was envisaging a move up, okay? I just felt it was, this was not to do with technical analysis. I guess it kind of is, but more about using the psychology of the market, thinking about what they're doing. So, that's where a dimension of technical analysis doesn't even come into it. But while I was waiting for questions, I thought I'd cover that because I felt that was a good prediction as well. And I hope you don't take it the wrong way, because I know I get comments from people say, you're using all these past examples, but you have to know that I was giving these examples in the actual time. So it's not just like it's not like I'm a hindsight trader, because I'm literally doing it in the time. And then I get comments from people saying, oh, this is past, some random guy on Twitter. It's, the reason it's passed on Twitter is because I was giving it to my group first, anyway, need to block out those trolls. Oh, nice comment from Igor. Yes, I remember the Bitcoin order block trade you did. It was really amazing, and took it on board. It was July the 17th. Amazing, Igor, because I totally forgot when it was. So yeah, that was nearly 6, 7 months ago. Wow, yeah, July the 17th. But yeah, that was an awesome Bitcoin trade. Oh, you posted it in here. Oh, nice. Yeah, let's take a look because it was truly amazing. Yeah, there it is. There it was. And again, this is one marked. This is something that I had marked out prior. So this is not hindsight trading, because I mark out the levels prior. I post it, and then it happened. That's the level I was waiting for and anticipating to hold, and that's exactly what we got. So we were looking there at the old consolidation. We came down and bounced off of it. So yeah, that was nice, and obviously that we had a bounce, and then we continued back down. So yeah, that was a nice long, to be honest. That was a brilliant trade. And well done for being able to remember that. Yeah, there you go. There you go. It was really, 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 really brilliant. And I think in the end it dipped down. It did do this. I'm pretty certain, if my memory serves me correct, it dipped down one more time to the 0.5 before taking off. Pretty sure. I can't remember 100% now. But yeah, that was a brilliant trade. Well done on remembering that. Hey Dan, does it mean Fibonacci time is just confluence? Does it mean fib time is just a confluence on its own without any other tools? Yes. So you don't want to use this on its own, because it would be really, I think it would just be silly to use any tool on its own. Okay, if you just delete everything here. So if we just delete everything and we say, if we just looked at this chart very simply and said, okay, so this was the length of the impulse here. We've finished the correction here. And we're going to short in 1 hour, it's 15 minutes time, because we've hit the 0.618. I mean, that would just be crazy, wouldn't it? That would just be so crazy to do that. So, I mean, that would be a really, really bad idea. You don't ever trade off of one thing on its own. So it's like you want to build the case. Okay, so you do want to build a case, use this tool in confluence with other tools, and then you will master trading. You don't ever want to use anything on its own, because you cannot build a strong case. And when trading is all about probabilities, you want as much confluence as possible. Yeah. So don't trade this on its own. Hey Dan, does it mean Fibonacci time? Oh, sorry, that was a question from Nelson. And this Imi. Today's live stream is like a magician telling us some of his secrets. It kind of is. Dario fell off his chair 5 times. Yeah, Fibonacci numbers are found in everything. Like literally, if you read any Fibonacci books, and they'll explain it much better than I will. But yeah, Fibonacci, you can see like Fibonacci, and like even the waves in the sea, the way they curl is at the 0.618. Like you got this on. You even got this as a tool on. That's the word I'm looking for, spirals. So the way that like the ocean, so imagine this is the ocean wave, it will turn at a degree of a Fibonacci spiral degree, and in a book they will, I don't have my one near me, but they'll like load this in really nice patterns so you can like really use it. But yeah, this is found in even in the stock market. So I mean, it's in nature. So some examples you'll see is like what's a really nice another example, like when you look at a shell. Okay, so the shell will also be curved at like 618. There's just so many examples. It's found all over the world. Architects, when they're building, okay, I'm not an architect, so don't hold me to this, but supposedly that when an architect is building, they'll look for the golden ratio. If you show 10 people a triangle and one of those triangles is built using the golden ratio, that's more visually pleasing to the eye. There's just a lot of examples. I think the eye is 61.8% the length of your head. Pretty sure that's one as well. So like this number is found all over nature and even in ourselves. So I think it's amazing that it comes into the stock market. Yeah, it's lovely. Igor, Fibonacci even comes up on a random champion meetup. Yes, this is a story that I must say because it was amazing. So obviously we done the champions meetup in what was it? December now. Yeah, so December we done a champions meetup and we went to play bowling together, and the team, it was actually my team as well, which was like even cooler. But yeah, my team, we done a everyone took their own bowl. Okay, we done bowling, hit their shot. Nobody thinking about this at all. But our total score at the end of the bowling was 618. I mean, that is just amazing. For that to happen to us on a complete and utter random fluke, for us to bowl a total team score of 618 is just like, you could not make that up. You literally could not make that up. So yeah, that was fully amazing. And to do it with like the chart champions was just like, yeah, cool. Would I like to build a case for approximate date of an economy crash? Yeah. I don't know. I'd have to do some of work on that. Not just, I wouldn't just want to guess that on stream and use Fibonacci time. That is kind of a case that I'd have to build up, and it's not going to be saying I'm going to be able to do in 5 minutes. So I'm up for like a challenge per se of like working that out, but I would have to do that in my own time and take a few hours. Hi Dan, this is really amazing. Could you clarify a bit as to when and why you would be looking at the 1.1618 and 2, for example, and what is the importance of the 0.618? Okay, so the first question was Neo. So let's do Neo, and then hopefully I can answer your question while doing that. Okay. The other question that I saw as while we were on it is this could be a shark. Yeah. So what you could see is this move up. Okay, this go to the 0.5 Fibonacci. Okay, and trade it like this. Again, not financial advice, do whatever you want, but that would be a shark 5-0 pan, and you would trade this for higher prices. But basically that would be the shark finishing, that would be the 5-0, and then you'd rise. So yeah, obviously you don't know where this high is at the moment, but yeah, because this could still potentially move up. But yeah, you have the 5-0 pattern in place, so really good spot. So let's do Neo. So the Neo was the requested one. So I don't actually trade Neo, so it'll be interesting because I don't look at this chart. So let's go on to the higher term time frame. Well, it looks like the only thing oh, here we go. So I do have an alert actually waiting for. Funnily enough, I have an alert. I can tell you why I've got an alert for this, because this is the low, so I know that there's going to be stops here, and I'm basically waiting for this, to be honest. And this is one that I'll happily stay patient for and wait another few months if need be. But it's funny that I just had the alert there. Yeah, let's do Fibonacci time. So let's work out when we could expect the alert to go off. Okay, that would be interesting, wouldn't it? So we have an alert for 1,100 sats. Let's work out when we could potentially envisage this alert hitting. Okay, so let's come out to the 3-day chart. So we here have impulse, correction, impulse. What we could do is try and build a case that this to me looks like the impulses are really quick and then the correction is really slow. Impulse really quick and the correction is really slow, isn't it? So out of interest, this last impulse happened very, very quickly. And I mean, I don't even have it on the chart to say how long this took, but we can say that this is probably, from the length of this impulse, this is altcoins for you, but I'm going to hazard a guess that maybe it was like a 12. Okay, so a little bit less. What, maybe 8? Oh, not 128. Yeah, there we go, 8. So this impulse, this correction took 8 times the amount of 8 times the amount of time as the impulse took. So I'm just trying to then, this is what I like to do, build up a case. So then we look at this next impulse. Okay, this one took, oh wow, would you look at that? So this one, put this in log a second. So from this impulse, this is going to have taken even longer, but funnily enough, at that 8 you did then see another 68% decrease in price, but this is even longer. And I mean, this is probably not even going to have any connection anymore, because it's just a bit of an extreme, isn't it? So yeah, so we can say about the 11 to the 12. I mean, I don't think we're going to see much of a connection here, to be honest. It's kind of, this is like, yeah, just really anomaly. But all we can say is the impulses on Neo seem really quick and the corrections are really slow. So when we look at this, the impulse of Neo, would you expect this impulse to, the correction to end at the 618? No, you absolutely wouldn't, because it does seem like the impulses are quick and the corrections are very, very slow indeed. I guess if we take the most recent example here, so impulse, the correction ended at the 1618. Okay, so what we can say here is impulse that bottomed out, funnily enough, to more or less the day here at the 1618 before getting an increase in price of 80%. Okay, so that's interesting. That's interesting. 1618. So when we look at this impulse, okay, from the low to the high, the 1618 is actually coming up. So if we move down to the daily, and do this a little bit more precise. So the 1618 here, I think it's too quick. Okay, I do think it's too quick, and that's coming in on the 1st of February. But in my estimate, that's going to be too quick as well. So I would say you're more looking, if I'm totally honest, for when I would expect this alert to come into play. What do we have here? So this came down to the 0.5 Fibonacci. From 0.5 we come up to the 618. Okay, wow. Okay, so maybe then we can go here to here so quick. Okay, so what I would look at is this. The amount of time that this leg down from C to B took. Okay, and extend that from C. And I would be saying that I would expect the alert to come off really middle of March. Okay, maybe the end of February, middle of March, but at the very least not now. Okay, so what I would say is more likely, because this again is really small in C, so what we could say is that C is maybe not over. Okay, so what we could say is maybe, I think this is a pretty quick the way it's come up, so I'd say it's likely that maybe we actually do something like this and then back up and finish C in a little bit more time, because I think it's too quick. So then we would obviously move C down to here, and then we would say that this leg is more likely, and maybe then it becomes a bit more bearish. Okay, but yeah, this leg is more likely to be coming in. I would say you're more likely to think bottom is coming in at around April, and that would make sense to me as well with the way Bitcoin is. Okay, so let's say, for example, Bitcoin continues to move up from here. Alts are going to struggle. So with that in mind, even if Bitcoin fell down, I think alts would struggle. So with that in mind, I think it makes much more sense that this is potentially not in, and this D leg is going to take a lot longer. Okay, building a case. So how have we built a case here? We've looked at the prior history of what likes to happen with NEO. We can say the impulses are quick, the corrections are long. The most recent impulse was a 1618 extension. So that's just a basic fact find. Okay, there's no arguing with that. We can definitely say the corrections are longer than the impulse. Okay, once we have then seen that, we're then building a case and saying, okay, it's unlikely that C is in here, if I'm honest, because this is a bit of just really quick impulse up, and then you're dragging down. It's just not a lot of time in this actual leg. So I'd say that C is likely not over. Okay, and then to actually get D, let's just say D coming in at 786. It's likely that this could be. We want to see a reason of thinking C is over. Let's just say, for the sake of example, C's in. Okay, and for this D though, we would want to really see this coming to around the 1618. Okay, and then you can build up another leg of confluence. So we know from A to B to C, that's the 1618 on the 20th of April. So then what we can do here is from the bottom of X to the top of A. What did I say? 20th of April. I did, didn't I? So A to B to C, I said 20th of April. Okay, so really then what I would say is the 17th of April to the 6th of May, because then you have a crossover here. You have a crossover here of the 3 and the 2. Okay, so that would make more sense because this is on its own. So, this period, though, is when you'd be looking at it. End of April, start of May, you could potentially envision a bottom being in. Again, we could cover more tools. And build more confluence. But I just don't want to do that in this stream, because if I start going over other tools, then you'll forget this tool. So, but yeah, really you'd be looking at more things than just Fibonacci time there. But I think that would make sense to envision that something like this, okay, that when maybe we get a flat coming in here, and this is going to work out as some A, B, C. Okay, so maybe I have my alert go off and it's only a B leg. And maybe, we just have to envision that. Maybe we labeled it this. I mean, there's so much possibilities at the moment in time. But all I would say is I don't think this is a bottom in on NEO. This correction hasn't been long enough, and I'm still expecting lower prices on NEO. I mean, that's good enough for me to make an informed trading decision of why I don't want to trade it now. Okay, so it's building a case. Is this correction too short? In my opinion, yes. Do I want to trade it? No. It's as simple as that, really. And now I can just have an alert and wait. Where's my alert gone? I can have an alert and wait for my criteria to be met. Okay, there was the alert. Yeah. So yeah, there was Neo. And the question was from Mike. Could you clarify a little bit more as to why you would be looking for 1618 and 2, for example? Okay, so it kind of depends. So let me delete this and delete this. So why would you look for the 1618 and 2 more than the 1? So I think it's really important to just remember that there's a rule, okay, and this falls under Elliott wave theory a little bit, but I guess just in general, that impulses are, I don't have the statistic off the top of my head, so I apologize, but I know because I do have this statistic, but I just cannot remember the exact one, and I'm sorry about this, but yeah, over a set of data, what we can say with 100% certainty is that corrections take longer than the impulses. Okay, so when you know that the corrections take longer than the impulse, you wouldn't be looking for 0.618 of the time of the impulse, because that's only just over half the time of the impulse. You wouldn't expect that to be the end of the correction, because generally speaking, probabilities are going to say the correction is longer than the impulse, so you'd look for at least the 1-to-1, because then it has, after it reaches at least just over the 1-to-1, that correction has taken longer than the impulse, and that's what you would expect. Okay, and the 1618 is just because that's the golden ratio. That's the number that you're looking for. And obviously, different harmonic patterns are going to be different. Okay, so just load up the cheat sheet. Some of the harmonics are A, B, C, D equals 1. Others are A, B, C, D equals 1618. So just look at the cheat sheets, remind yourself, and yeah, that's how you can kind of use it. Another question. So many questions. I hope I don't miss any here, because I just see there's a crazy influx of comments and I'm not sure if I missed any. At what time frames can Fib be used effectively? Oh yeah. So you can actually use you can use this on any time frame. Okay, so you can use this on any time frame, and I know that's not a helpful answer, but you literally can. I've deleted all my scalping harmonics. That's a shame. I probably should not have deleted them, but I'm not sure how many of you can remember. But this must have been like last week when we were scoping. You'd have had to have been active in the group, and I think it was here. It was here, and I'll try and see if I can find them. I can't remember now. I think it was. I think it might have been this one. I have a feeling that it was this. I can't remember the exact harmonic what I was trading now, but basically it was all in the group documented, and we were trading down on the 3-minute time frame, and we were trading something like this. I can't remember the exact pattern now, but yeah, this was also with confluence of Fibonacci time, of looking at from the high to the low to the B. Again, I can't remember the exact pivot high that I selected. Maybe it was a pivot back, but basically it was something like this. That we were so. Yeah, unfortunately, I can't find the exact one, and I can't remember the exact point because it was on like the 3-minute chart. So, yeah, I'm struggling to remember when it was. But basically, to answer your question, you can actually see this down from the 1 minute, the 1 minute chart up to the daily chart. All I would like to say is that the higher the time frame, the more reliable it is. Because when you're on the 1 minute, it's not as reliable. So, as a general rule of thumb, just as I like to say with my harmonics in general, or just patterns in general, to be honest, you have more probabilities of like trading these sort of things 4-hour plus time frame. Okay, so I like to say they're better on the higher term time frames, really, and Fibonacci time you'll also find is more reliable on the higher term time frame. I am losing my voice, by the way. The best way to use Fib time is only impulsive? No. So the best way is not necessarily only impulsive. So what's a really bearish chart I can think of at the moment? I guess we could just like load. So yeah, you don't only use this on impulsive moves. So what we could say is, let's say that this is all part of a correction, okay? And what we could do is a Fibonacci trend-based time from the start of the correction to the end of the correction to wherever our top is coming out here, okay? So wherever our top is coming out. So let's say we top out at 11k, for an example. If we top out at 11k, then this corrective move to where we had a big impulsive structure to 11k, what we can say is if that is wave one of or leg one of the correction, then we had a smaller impulsive move. For the next leg of that correction, of let's just say this was some form of WX and we're looking for a Y, what we would then say is that this was the first part of the correction followed by a connecting phase. So the next phase of your correction would be looking way in, yeah, okay, just a one-to-one extension of the first part of the correction. Okay, so the relationships on this would be for the Y, for the X, for the W wave, a Y is like to be looked at as a one-to-one. Okay, so the length of W from the X, okay, is a one-to-one. So yeah, it can be used on impulsive moves and corrections. Okay, so let's just draw it off of here. If you have a correction, when you have your impulse for that correction, you would look for, as you all know, let's just say you would go one-to-one extension. Okay, you'd look for this as a one-to-one extension, wouldn't you? And then when you know where price is going in that extension, okay, so if we just draw this like and then we say we're looking for 1, 2, 3 to the one-to-one, okay, well and good, you have where you're looking for in terms of price, but then you'll also go from the start of the correction to the end of that correction to the top here. And what we would say is we'd be looking for the one-to-one, but we would expect it to play out like this. Okay, and go a little bit longer, because this would be too quick. Okay, and we'd actually expect our correction to look like that. Okay, coming to the, you know, around a one-to-one. That's your perfect one-to-one. Okay, this is your perfect one-to-one on one-to-one. So you hit the one-to-one in terms of time and price, and they come together, and it's amazing. So yeah, they can be used on corrections and impulsive moves. Yeah, bowling was fun. Dan, what is the fib time telling you for the next move of Bitcoin, long term and short term, please? For me, I believe that we're starting some bullish phase in Bitcoin. As you all know, you know, I've been positioned this way for a little while now. So yeah, I think that we're bullish on Bitcoin. Okay, this is an argument. Okay, and I fully respect the argument that we're going low, lower low, lower high, lower low, lower high, lower low. This is a lower high, we're going for a lower low. What you have to think is, you know, if you can, you know, I understand that argument, but I believe that we're going to be going up from here, basically. I can be wrong, and I've made enough money now that if I am wrong at this moment in time, I've made more money then I will lose. So if I'm wrong, I couldn't care less, if I'm honest, but I must be honest, I do think that we're going up. So yeah, there's that. But more than happy to be wrong. But yeah, I am looking up from here. And in terms of like fib times, if we could, so let's say for an example of fib time, when we could say that this could, let's say when we could potentially think that this is linked in terms of time and this was a low, then what we could do is the length of this impulse from the low, and maybe we could say we'd be looking for this to top out. You know, let's say we would like to this to, you know, let's say we reach 17k and this happens around June. Okay, so wouldn't that be funny? June the 26th. Okay, so yeah, maybe June the 26th, maybe June the 26th we top out again. But yeah, that's obviously the one-to-one, and if it gets really impulsive, then you'd be looking at October. But yeah, in my opinion, okay, I am leaning bullish. I just don't see a reason to be bearish. And this is the thing in trading, you have to be open to being wrong. I'm more than happy to be wrong and say, oh, I was wrong here, but I've been bullish since 6k, and so far it's made me a lot of money. So if I am wrong and we head down, obviously I will switch short, but until at the very least we lose support, okay, and flip that to resistance, then, you know, I have no interest in trying to time the absolute top, if I'm honest, and I'll happily short a little bit lower. But yeah, but I do think we're going up. And in terms of time, then yeah, we have plenty of space to keep running up. Does this fib time work on every time frame, even the 30-second? Yep. So yeah, I mean, if you're active in the group in the day, then it kind of speaks for itself. But yeah, I've been trading harmonics down on the lower term time frames, which include, for me, when I do a harmonic, I like to look at time and try and find some examples. I'm not sure just whether I will be able to offhand, but basically, yeah, it all like links together. I'm not going to be able to find examples on the stream, but just go into the group chat and yeah, so you can use it down on the really low time frame, which I was scalping 100%. Won't support resistance be good confluence with Fibonacci time? Yes, 100%. Like support resistance. I mean, just look at this channel. Okay, so just look at this channel here was a really good support. So this is why I say never remove a channel. Obviously, this was the original channel. Okay, that was the original channel that we had. Okay, low to high. You can see the midpoint, how amazing that was. And then we never remove a channel because you expand it forwards in time. Low to high, loss, rejection, come back through, another rejection. This was where it got a bit nice. So you come back into the channel, hold, and you move up again. So then your low, high, lower, higher, low. Okay, higher low, then there's your higher high. That's the trend change at this moment in time. And then it was also a trend change of coming back onto the middle of this old channel. Then look at this. Okay, where do you touch to the exact dollar? You touch to the exact dollar, the old channel high, before obviously just moving up again and again. So yes, but yeah, in terms of the question, yeah, support and resistance can be used, yes, 100% with confluence with Fibonacci time. Hi Dan, do you compare Fibonacci time pools together to look for confluence between two different pools, like with standard fibs, e.g. pool X to A and then compare B to C and look for the time confluence? Yes, you can definitely do that. So you can definitely do that. So let's say on here, okay, what I would generally be looking for at the moment is A, B equals C, D. As you can see, we've already hit the 1618, but maybe this still has room to grow. And then for a confluence, what we could be doing, I mean, I would pull back from here. I would pull back from the last impulse because I like to compare impulses. So if we say that this was our last impulse, so this impulse from the low, this topped out between the 1618. Okay, so very close, more, close to the 1618, we can say. Okay. Let's just work it back. Okay, let's just work it back from the start. From this low to this high to this low, you see the 1-to-1 extension was put in at the exact 1-to-1 of this impulse, and then we got retracement. So let me show you. We moved up, we moved down. We hit the 1-to-1 extension here, and we got a pretty big move to the downside off of that 1-to-1, yeah? So we can say the 1-to-1 there has been very nice indeed. So then that's moved back on again from this low to this high to this low. Here the 1-to-1 is not so it's not so important, if I'm honest, but here we can nevertheless see a little bit of a reaction. We don't really, if I'm honest, time any high there on a Fibonacci time. Okay, so wouldn't have really been helpful trying to time that high. Okay, but what we can say in terms of this next high is low of this last impulsive leg to the low of this impulsive leg. We've hit the 0.618, but for the 1-to-1, we're really looking 2nd of Feb. I mean, I just feel there's a lot of space to grow. Okay, in terms of time, and even if we pull back from the first pivot, and say that was I guess this is hard because this is, for me, is all part of the same impulse. So I'm not looking at it like different sections because I think this is all combined one big impulse. So it's a little bit hard to say of it when it's like this. But yeah, I mean, it's pretty difficult. But I guess we could just pull it from the first one. Yeah, I mean, it's all part of the same. So yeah, basically though, to answer your questions, yeah, you can definitely look for confluence at other pivot highs. You don't just have to focus on this one section and only take the Fibonacci A, B, C, D. That's what you do when trading a harmonic. But yeah, if you can add in other pivots and build up a stronger case, then yeah, that's absolutely fine. And in my opinion, the only other case that I would try and build up, instead of just having A, B, C, oh, I told you I always do that. Instead of just having A, B, C, D and looking at the 1-to-618 there, and I would also take from that high to this high to again from that low to this high to this low, and well look at that actually. So you do have the 0.618 there on the, oh, I can't see that, 1.618 on the 2. So funny enough, you might envision actually something to start happening in the very short term. Okay, so you could say that this is actually going to probably get some sort of reaction, and you'll be able to see for yourself, because one would say that in the literally by daily close tonight, maybe by 1 o'clock tonight, you should see some form of reaction. Okay, one would say that there's a high likelihood of seeing maybe it's just a swing failure, but one would say envision a reaction at this high. Maybe you do just take the high and move down, but Yeah, one would say it's lining up, and yeah, those are the sort of confluences that you want to see 100%. I am going to call it a night here, though. I am going to call it a night. My throat, in combination with no water left, is feeling it. I hope that you have thoroughly enjoyed this one, and it's like giving you a new thought process and a new thing to check, and just realize, as I kind of mentioned, that it's not all about price, but you know, many people don't even know that the the x-axis or the time exists, when it is really, really important when determining, you know, when you ask that question, when you take a trade, is this the most probable? And when you start asking yourself that question, now you can start thinking about time. Is this correction likely over, or is it too short of a time? That's the question I ask myself when I take a trade. So now you can ask yourself that question. Now you know how to use the tool. Okay. Yeah, I suppose if you feel I've missed anything, then you're going to have to come across and tell me in the Discord chat, and I will happily answer questions there. But for now, I am calling it a night. Hope that you have enjoyed the stream. Thankfully, we had no trolls in the chat comments, so that was nice. And yeah, thank you everybody so much indeed. I really do hope that this has been beneficial, and it's like increasing your trading knowledge bit by bit by bit. And I feel that the time is so important to the market, and it is going to give you an edge. This really will give you an edge, because you're going to start being able to time entries better. And I just love so much that I could give that example from literally a few days ago of why I was not expecting this rise to happen, but I was expecting a drop before the rise. And that just shows you, like with a real life example, why using time is so good at timing entries. Because if you had bought here, you would have missed the move. If you buy, you know, at the 1-to-1 extension, you get all the moves. So yeah, hopefully now you can start timing entries better, and you know, becoming a better trader. So thank you everybody so much. I'm going to wrap it up here. Have a brilliant evening, and if you need to, watch this video you know, 2, 3, 4 times over to make sure it really sinks in. Thank you, and yeah, good night. Cheers. Bye.